Welcome to the Deep Dive, the place where we sift through the noise of market data and earnings calls to deliver the essential knowledge you need without the fluff. And today, we are undertaking a deep dive into a company that didn't just meet expectations this quarter. I mean, it completely redrew its own valuation map.
That's absolutely right. We are focused squarely on Rubrik's third quarter fiscal year 2026 results. When these numbers landed, after market close on December 4th, they basically confirmed what many had hoped for, but, well, few had really banked on. Rubrik is transitioning from a high-growth security startup to a disciplined, highly profitable enterprise software powerhouse.
The market reaction was frankly electric. We saw an immediate stock re-rating of about 22.5%?
In the very next session.
Yeah. That level of conviction, that kind of buying, it just doesn't happen unless management has done something truly monumental, something that validates the whole long-term narrative. So our mission today is to figure out exactly why this quarter was seen as such a re-rating event. Okay, let's unpack this massive surprise. I think we should start with the four big headline numbers that really signaled this profound shift in momentum.
Good idea. And they all point to one central story, really. Rubrik has finally cracked the code on scaling profitably.
And the biggest one has to be profitability itself, the turn to profit.
Absolutely. The biggest story, and arguably the most important signal for its future valuation, is that sudden turn. Rubrik reported non-GAAP EPS of 10 cents profit per share.
And that's not just a positive number, that is a colossal beat. I mean, consensus estimates were modeling a loss of 17 cents a share?
Exactly, a loss of 17 cents. So that 27-cent beat and achieving their first non-GAAP profit as a public company, that's the kind of inflection point that changes how the entire street models your business.
It just fundamentally addresses that unit economics risk that shadows every growing software firm,
It does. And the second point reinforcing this is the top line growth. Total revenue landed at $350.2 million.
Which was well above expectations.
Well above. It exceeded street expectations by roughly 8 to 9%. And crucially, that represents a 48% year-over-year revenue growth rate. They're not slowing down to get profitable. They're accelerating.
Then you look at the true fuel for the business, which is subscriptions. The annual recurring revenue, or ARR, hit $1.35 billion. That's up 34% year over year. But the truly staggering metric was the net new subscription ARR added during the quarter. They brought in, 94 to 95 million?
To put that into perspective, the consensus was expecting just 69 million in net new ARR.
Wow.
Beating your key growth metric by over 36% is exactly why the stock moved 22% the next day. It just confirms that the demand environment is much stronger than even the most bullish analysts were thinking.
And finally, the operational discipline. You can see it perfectly in the cash metrics. Free cash flow, or FCF, hit a record $76.9 million.
And that number is almost 5 times the FCF they generated in the same period last year. That's not a marginal improvement. That is an exponential leap in operational leverage.
Yeah, and that jump in free cash flow is the perfect segue, I think, into discussing the quality of this growth. Because when a company's growing revenue by nearly 50% year over year and generating 5 times the cash flow, you have to dig into the margins.
You really do. You have to understand how sustainable that explosion is.
Right. So we know they're bringing in more dollars and more cash, but how efficiently are they earning it? Where should we start? Gross margin.
Let's start there. The non-GAAP gross margin improved to 82.8%. That's up nicely from 79.2% in the prior year.
Which is stellar.
It's stellar performance, but the real key, I think, to understanding the leverage in a subscription business is the ARR contribution margin.
Okay, now, for many of our listeners, those are big words that might just feel like jargon. Can you break that down for us? What is ARR contribution margin, and why is a huge jump here so important for the long-term Rubrik story?
Sure. Think of it this way. ARR contribution margin measures how much pure profit, before you factor in overhead like R&D and admin, is being spun out of their recurring subscription revenue. It's the ultimate measure of their unit economics.
I see.
So if that margin is improving rapidly, it means the cost to service and support new subscription customers is shrinking dramatically relative to the revenue they generate.
And what did that number look like at this quarter?
It jumped 1,360 basis points.
Oh.
Yeah, that's 13.6 percentage points year over year to 10.3%. The company explicitly positioned this as, and I'm quoting here, best in class.
That's a powerful claim.
It is, and the numbers back it up. That efficiency gain is the reason they suddenly became profitable, way ahead of schedule.
And that improvement speaks volumes about their internal execution. You can see that health in the customer metrics, too.
Right, the subscription net retention rate.
It's still robust, staying above 120%. So existing customers are expanding their spending by over 20% year after year.
Exactly. And those customers aren't small. Their base of large customers, the ones generating 100K or more in ARR, grew 27% year over year. They're at 2,638 now. These big enterprises are betting more and more of their IT budget on Rubrik.
So with all this strength, it's really no surprise they immediately offered a sweeping guidance raise. How significantly did they bump up their expectations for the full fiscal year 2026?
They raised the full-year subscription ARR target to a range of 1.439 to 1.453 billion. That implies about 32% year-over-year growth.
And the cash flow.
More importantly, yeah, the cash flow story reinforced that strength. Full-year FCF guidance was raised significantly to between 194 and 202 million. Even their profitability forecast improved. They tightened the loss to just 20 to 16 cents for the full year.
So they're basically saying this profitability milestone is now permanent.
That's the signal, yeah.
Okay, before we move on to strategy, we have to address a really crucial, forward-looking accounting nuance that the CFO specifically highlighted. It involves something called material rights revenue.
Yes.
This feels like a potential future speed bump that every investor needs to be aware of.
This is a perfect example of a deep dive detail that can easily be misinterpreted if you only read the headlines. So the CFO noted that $68 million in this material rights revenue is contributing to the high reported total revenue growth rate of 44% this year.
And what exactly is material rights revenue in this context?
It's largely a tailwind from their successful, aggressive cloud transformation journey. So when customers migrate their on-premise licensing to the cloud subscription model, Rubrik gets to recognize certain non-recurring revenue components upfront. That's the $68 million.
So think of it like a one-time fee to transition the customer to a much more valuable long-term contract.
Exactly. A substantial one-time fee.
So if it's non-recurring, what's the consequence for next year, for fiscal year 27?
The consequence is that once those big migrations normalize, that $68 million revenue tailwind just it goes away. So the CFO warned that in FY27, the reported total revenue growth rate will inevitably lag the subscription ARR growth by a few percentage points.
Right, so it might look like a deceleration on the surface.
It will, but the underlying business health, the ARR, will still be robust.
So the key takeaway for you listening is this. If total revenue growth dips next year, don't panic. Look past that headline number and focus purely on the subscription ARR growth rate. That's the true sustainable engine of the business.
Precisely. It prevents the market from misinterpreting healthy ARR growth as an overall slowdown.
Okay, now that we've established the financials are rock solid, let's pivot to strategy, because here's where it gets really interesting. The CEO, Bipul Sinha, he used this call not just to report results, but to officially reframe the entire business.
He is now aggressively branding Rubrik as a security and AI operations company. He's moving them far beyond just data protection.
And the core philosophy is this assume breach mindset.
Right, meaning they're focused on resilience and recovery, not just prevention.
And they're proving they deserve that strategic repositioning. They're accelerating legacy displacement. I mean, they are taking serious market share.
They gave two phenomenal anecdotes of competitive wins that really show the magnitude of this shift. First, they displaced a long-standing legacy vendor at a top global Asian bank.
That's a massive win.
A huge win that standardized Rubrik for data protection and their identity recovery solution for over 250,000 users. The scale alone just speaks to the trust they're building.
And the second example was equally striking. A Fortune 250 professional services firm also threw out their 15-year legacy backup vendor.
And chose Rubrik's unified platform. These aren't small, easy wins. These are major enterprises deciding that the old way of handling data is no longer good enough for modern cyber threats.
Right. And this momentum feeds directly into their future growth narrative, which is built on what they're calling 3 converging pillars.
Correct. Beyond core data protection, the two most exciting growth segments are identity resilience and AI operations.
Let's start with identity resilience. This is all about protecting the digital keys to the kingdom. How fast is this segment growing?
In just over 3 quarters since it became generally available, this business has hit an estimated $20 million in subscription ARR.
Wow. That is a blistering pace for a new product line.
It is. And that speed shows in the customer adoption numbers. In Q3 alone, they doubled their identity customer count. And 40% of those new identity customers were net new to Rubrik entirely.
So they're effectively using this new product line as a wedge, a way to bring in entirely new customers and, more importantly, tap into the CISO's budget, which is totally distinct from the CIO's traditional backup budget.
Exactly. And they're strategically expanding the breadth of their coverage, too. They launched Rubrik Okta Recovery.
Which means
Rubrik is now the only solution that supports recovery for Okta, Active Directory, and Entra ID. So if your identity provider gets compromised, having that undo button is mission critical.
that focus on recovery, not just detection, that has to be a massive differentiator. And what about the partnership expansion with CrowdStrike? How does that fit in?
That integration allows for what they call surgical remediation. So CrowdStrike can detect a malicious identity change, and Rubrik can then instantly and precisely roll back that specific change.
So it moves beyond just an alert.
Way beyond. It moves from just alerting the customer to actively helping them recover their identity environment back to a known good state, all through one unified platform.
Okay, now let's talk about the biggest future opportunity, AI operations. The CEO made a really provocative statement here. He said that AI agents present 100 times more risk, but promise 100 times more opportunities.
He did, and Rubrik is moving to capture that opportunity. They're launching something called Rubrik Agent Cloud, or RSC, which is in beta right now.
And what's the vision for that?
They view it as the integrated enterprise control layer for managing the entire AI agent lifecycle. The risk, as they see it, is that these AI agents, well, they assume an identity, they operate on critical data, and they execute processes on applications. If an agent goes rogue or makes a catastrophic mistake, who's responsible for the cleanup?
This sounds like a grand vision, but we've seen major companies overpromise on AI before. What tangible evidence did they give that proves Agent Cloud is more than just a concept, that it can be a material revenue driver in FY27?
That's a fair question. The differentiator is the focus on 3 specific, non-negotiable enterprise requirements: monitoring, governance, and full remediation. And the crucial innovation is that third point: the ability to undo mistakes via something called Agent Rewind.
An undo button for AI.
Exactly. CIOs and CISOs will not widely deploy AI agents until they have that ultimate guardrail. Rubrik is arguing that because their platform already manages the identity, data, and application layer, they're the only ones positioned to actually build that Agent Rewind functionality.
That's compelling. If you can confidently deploy an AI agent knowing you can surgically roll back its errors, it accelerates adoption significantly.
And they are strategically embedding themselves in the ecosystem early on. RSC is integrating with major platforms like Microsoft Copilot Studio and AWS Bedrock. They're ensuring that as soon as enterprises start deploying agents from these hyperscalers, Rubrik is the control layer of choice.
Now, if we connect this all back to the broader software sector, Rubrik's outperformance this quarter isn't just because of a rising tide.
Not at all. Over the last 3 months, Rubrik's stock was up about 5%, while the overall U.S. software ETF was only up about 3%, and the cybersecurity ETF was actually modestly negative. So this gain is purely company-specific execution.
We also have to remember the sentiment swing here. I mean, following the Q2 earnings back in September, the stock fell nearly 15% because of some momentary concerns about ARR trends.
Right. So this Q3 print was the ultimate buy-side relief. It completely erased those doubts. It reasserted that Rubrik is definitively a high-growth, improving margin story.
And the long-term narrative holds that every major IT shift cloud, cyber, and now AI has only widened Rubrik's total addressable market.
And with 34% ARR growth, strong free cash flow, and this clear AI momentum, the execution strongly supports the case for continued multiple expansion.
Can you just quickly define multiple expansion for our listeners?
Sure. It just means investors are willing to pay a higher valuation multiple, a higher price per dollar of revenue, because the company has significantly lowered its risk profile through profitability and demonstrated a vast untapped market for future growth. Rubrik has done both this quarter.
All right, it's time for our provocative segment. We have to introduce an outrageous but plausible idea for those of you who want to explore the edges of this narrative. And as always, this is purely theoretical, and it is not personalized financial advice. please do your own extensive research.
Okay, so the thesis for this trade idea relies entirely on the successful monetization of the AI agent cloud and identity resilience. The company has framed these as completely additive. They're targeting entirely new CISO and CTO budgets, and they're solving the single biggest inhibitor to enterprise AI adoption.
Which is the ability to govern and undo mistakes.
That's it. Given the speed of their existing identity resilience adoption, we believe the market is severely underestimating the velocity at which the Rubrik Agent Cloud will move from beta to a material accelerating revenue contributor in fiscal year 2027.
If that agent rewind capability truly captures the enterprise imagination, that value capture will accelerate.
So the outrageous but plausible trade is a long-term strategy, maybe targeting 18-month call options. This bet relies on the success of the Agent Cloud, potentially accelerated by the integration of tech from their Predabase acquisition and those early wins with AWS Bedrock and Copilot Studio.
The ultimate payoff here relies on Agent Cloud enabling Rubrik to not only keep displacing legacy vendors, but also to capture a substantial premium from this new AI operations market. And that would lead to a massive re-rating. We've seen some bullish analysts already mentioning targets in the $110 to $130 range.
So this trade is a high-risk bet that the accelerating AI platform revenue will get them to those levels far faster than the consensus expects. It's a bet on the vision matching the most aggressive execution.
So what does this all mean for you, the learner? The core takeaways from this deep dive are crystallized. Rubrik delivered record execution across the board, achieved its first non-GAAP profit, and forcefully doubled down on this security and AI operations vision through identity and Agent Cloud.
This print, it clearly validates the CEO's ambition to build a long-term foundational enterprise technology company. They aren't just chasing trends, they are aiming to lead and shape the future of cybersecurity and enterprise AI governance.
The message is that Q3 FY26 was the quarter Rubrik converted its compelling strategic vision into verifiable, accelerating financial results. Now you have the synthesized knowledge to continue exploring this exciting story. We'll see you on the next deep dive.